Ashok Kumar of Rodman Renshaw. He's ranked by Bloomberg as the #4 analyst on Intel, and he joins us this morning from Palo Alto, California. Ashok, what do you think of this guidance that we got from Intel? Is that pretty much in line with your expectations? Because it really shook the markets, and we saw a sell-off in Intel shares.
Good morning, Susan. Yes, I think the pre-announcement was pretty much expected. So the $1 billion shortfall translates to about 10 million unit deficit, which is down about 10% sequentially. We think the deficit, the supply deficit, should peak in the March quarter, and the supply demand should come back into balance, by summer.
Okay, by summer. So why, if it was expected, why do we have Intel drop 4% yesterday?
I think, Susan, the stock has been one of the best performers in the semiconductor index so far, right? Since September, the stock is up almost 20% over the SOX index, and given lack of revenue growth next year and earnings, we expect it to be down about 15% in 2012 over 2011. We think the stock's pullback is probably warranted near term.
Okay, but do you think it comes at a really bad time for Intel? I mean, we had this flooding in Thailand, which I guess caused the shortage in hard disk drives, and computers are putting off their orders. What's the outlook like for Intel and really just the semiconductor industry itself?
Yes, Susan, I think near term, I think, yes, I think there's no real catalyst, for this stock over the next 6 months. But similar to what we saw following the Japan earthquake, we think this is a transitory phenomenon. So if you look out at 2012, there are major product catalysts which include, the Windows 8, we include the Ultrabooks, it includes the server product line. So all of those should be positive catalysts. The negative catalyst, of course, is the ARM on Windows support, so that should provide some cannibalization. And the macro backdrop, again, we see tablets eating into the PC opportunity. So the net is, we see I think valuations on a relative basis, compelling 12 multiple on out-year estimates, 3% dividend yield, but it's patient money that's probably going to be rewarded because the next 6 months we don't see any fundamental catalyst in the name.
All right. Ashok, outlook for Intel shares. They dropped to $24 yesterday. What could they trade at next year?
I think right now preliminary numbers are $51 billion on the top line, which is down about 5%. We have $2.25 in earnings estimate. If you look at the large cap peer group, Susan, the IBM, the Microsoft, Cisco, they all carry a 12 multiple. So we think the fair value for the stock is in the 25 to 27 range, and you have a 3% dividend yield, which also provides a valuation backstop. So I think that's the upper end of what we think the stock is worth next year.
So not much upside for next year for Intel, at least. Okay, tell me this, Ashok, one more question for you. What's the best bet in the tech space?
I think near term, I think there are some uncertainties, right? In the large cap name, we still like Apple, but I think there's not going to be much of a revenue upside for the December quarter. The iPad units are going to be a little soft near term. The iPhone, because of supply issues, there's not going to be much of upside. But looking out at 2012, we have, again, major product cycles. There's a product refresh in iPhone as well as iPad, which could resuscitate, top and bottom line growth. But given this macro uncertainty, Susan, I think it's probably one of the safer bets, for capital preservation.
Okay, so Ashok, I didn't hear you. Are you saying Apple is one of the best bets right now still in the technology space?
Yeah, I think if you have a 6-month, type of time horizon, I think, that would be probably a safer bet because I think near term, Susan, I think it's all about capital and investment preservation as opposed to, alpha. And I think Apple fits that bill, squarely.
Okay. Ashok, good seeing you. Ashok Kumar of Rodman